give us a
Thank you.
sense of the numbers, not particularly of Polycab, but if you could just give us a sense of the entire wires and cables space with the kind of competition, the recent news flow the sector has seen. The sector has been through a lot. What's your take on the space?
So I think the stock prices are actually corrected in the recent bout of correction, but I think this sector has been has demonstrated a good performance in terms of operational matrix and stuff. So I think there was a sort of a concern with respect to the infra spending by the government. There was certain amount of containment that was there. So I think the in the recent past, the government has actually stepped up a lot of these spending, which is actually supportive of the wires and cables industry. So I think, and this sector has been doing really well, I would say. So it created the correction, actually created an opportunity. So wires and cables, I think, is a sector that most investors are betting on. So every dip is something that people are actually using as an opportunity. And over the last several years, I would say the sector has been doing well.
All right, so Dhananjay, for now we have seen IT disappointing, and even the wires and cables as a segment, that is the first major numbers that we are seeing that is through. But Dhananjay, a whole host of banking counters will be in focus, not just today, the Saturday, coming Saturday as well. We have two major companies coming out with the numbers. Help us understand, what are you penciling in with respect to banking numbers, and any outliers do you believe that one should look out for in terms of stocks as well?
So I think if you look at the operating performance of the banking sector, I think we all know that there is a fall in the credit deposit ratio since say over the March levels, which was at a peak level. We've seen that credit growth has actually decelerated to somewhere around 9% or thereabout. If you look at the overall system, and there has been a sort of excess liquidity that has been there, and the RBI has also cut rates. So I think the issue is all about the operating matrix, the way the banking sector can grow. So I think a deceleration in credit growth is something that's not very beneficial for the banking sector. And with that, with liquidity being excess and RBI cutting rates, the pressure on margins would continue. I would say the earnings growth that we are projecting as a whole for the coverage company is working out to be somewhere around 1.7% year on year for the first quarter. I would say that which basically reflects the fact that there is a lack of other income support. That is that the fee-based income, quite apart from the fact that there is a margin compression. And I would say that this is notwithstanding the fact that there was, easing of the yield, GSEC yield, and as a result of that, the yield curve actually may have given a trading profit for the banking sector as a whole. But I would say that private banks had actually done well. There has been a significant revival in the interest in names such as HDFC Bank, Kotak Bank, etc., and even Bajaj Finance in the NBFC sector. So there was a certain amount of rally that was there, and of course the fact that there was sort of some strengthening in rupee, which has actually given some valuation benefit out there. But I would say that going forward, the operating matrix will be very relevant. If you have 1.7% earnings growth for banking system, it has got a very large weightage in the index. So I think that is something that people might start to shave off a little bit. So I think it's quite possible that investors might actually switch to some other sectors where earnings trajectory is relatively more resilient, and that's the view on the banking sector stocks. I would say of the overall, the universe of coverage that we have, HDFC Bank has got looks better in terms of earnings trajectory. There are certain tailwinds with respect structural tailwinds with respect to their cost of fund and what they're doing with respect to hiving off some of the low yielding assets. That is kind of improving the margins, or at least have a certain tailwind on the margins. And of course, they're optimizing on cost and stuff. So That's the broader thing. The overall banking sector is on a optimization mode. They're trying to uh, draw a certain amount of profitability through optimization of cost, overhead costs, etc. So I think that's the view on the banking sector.
Okay, so that's Dhananjay's take on the entire banking sector, what we can expect to see in terms of numbers and